All right, welcome back to the Canadian Macro Investor Podcast, which we run once weekly on the Canadian Investor Podcast stream. My name is Daniel Foch. I'm host of the Real Estate Show on the TCI Network, Canadian Real Estate Investor Podcast, with my good friend Nick Hill, and obviously joined as well.
I am not Nick Hill.
You're not, no, far better looking than Nick Hill. The wonderful Simon Belanger, who is stock and macro extraordinaire, and I'm always excited to have these conversations with you to figure out what's going on in different places around the world. You were going to talk a little bit about the yen today. There's some AI stuff. I've been trying to get an understanding for the yen, but I feel like I don't really have I feel like it's just not a credible. I kind of laugh whenever people post about it. It's like, oh, is the carry trade unwinding again? Right. So
yeah. I mean, it's pretty complex. I feel like I know a decent amount, but I will give people resources if they want to listen to a podcast that goes into much deeper dive. There's a lot of moving parts when you get into the plumbing of our financial system. Gets pretty complicated.
Yeah, 100%. No, I'm. And what else are we going to go through? And then before you jump into that.
So we'll go over that, maybe touch a little bit on the SpaceX IPO. We did talk about it on the most recent episode that was released today for the Canadian Investor Podcast, but touch a little bit of that. We'll talk a little bit about AI, CapEx in general. I think some worries that the AI commitments have hit over $2 trillion in terms of not only CapEx spend, future commitments, but also leases. So that's a number that's been thrown around. Talk about Canadian GDP, which I haven't had the chance to look for May, but I feel like you have.
There was some that
I'll defer to you on that.
Well, yeah, and it's funny because I always just try and tell the truth, right? But if I post something negative, I get a bunch of people who are pro-government, saying that I'm biased, and then I post something positive, and I get a bunch of people who are anti-government saying that I'm, a shill or whatever. So
you're doing it right when you piss off people from both sides. Exactly.
So, yeah. And so that's what I like. It makes me very happy that I get accused of being wrong or whatever by both sides of I don't really identify with either political extreme. I think even people who I'm obviously more conservative, but I think even people who are conservative in the more public and kind of branded sense have lost the true meaning of conservatism in Canada a little bit, like personal accountability, and they want more regulation, and they get upset when taxes are being reduced on certain things. I'm just confused by politics in this country right now.
But even on a personal basis, right? I learned, I think I was in my early 20s or late teens, and I can't remember who told me, but they said, if everyone likes you, you're doing something wrong. If everyone hates you, you're doing something wrong. If you have about 50-50, it means you're doing something right. So you're either a people pleaser, you're an asshole, or you're balanced.
Well, yeah, and I think the politics side is kind of funny too, because you have these groups yelling on either side, and it feels like that's the whole population, that we're incredibly polarized and whatever. But the reality is the vast majority of people are somewhere in the middle of those two groups and don't spend their time yelling about it on social media. So I think you would probably actually be more aligned with most people. It's just nobody's going to take the time to to tell you that you're sort of part of the lowest common denominator. So I've always found that kind of piece funny. It's just a big yelling match, typing in all caps and whatever. Social media has just really, really brought out the worst in us.
On a side note, I came back from Syracuse last weekend. I have family over there, and Syracuse, New York, upstate New York, very different than New York City. I will just say that. I would say I haven't been Midwest a whole lot, but I think it has vibes a little bit more than the Midwest. And it's interesting just hearing people, seeing the views. It's when you start talking to people, it's not all that much different than over here. People just want to get ahead in life. They want to be able to afford food, afford things, live a good life. It's
people are struggling economically in the US for sure.
Yeah.
It's more disparate, I think, financially than Canada, right? It's easy for us to say that things are really bad here, and they are, and it's visible in most economic data. But I think the idea that the US is gonna have some sort of exceptionalism, like, yeah, they'll probably scrape by a recession, but it's all just a concentration of capital and wealth moving up. So that's, it's not really a appropriate, like, eventually that ends poorly. I mean, history would tell
Mhm.
us that it almost always ends in revolution, and I mean, the US is the most armed citizens in the world, so the likelihood of that actually being an outcome would be higher there than other places too.
Yeah. I always joke if I lived in the US, I would have a gun. I don't have a gun, but if I lived in the US, I would definitely have one. But let's move on from probably societal and philosophical topics here. You want to start with the Japanese yen? It's been the talk. Did you see that note, whether it was planted or not, on Scott Besson's desk?
Yeah.
Buy 5 to 10 billion of Japanese yen. Just a
Mhm.
little casual 5 to 10 billion buy right there.
So, I guess Japan had been, kind of, like, intervening
Yeah,
in their currency markets, or was it their bond markets
in the
for the
currency
central bank?
market. So
And then the
I mean
US.
they do yield curve control. So let's be honest, they do both. I think they're the Bank of Japan's the largest holder of Japanese bonds. But yes, this was the currency for those that are not on watching right now or watching the replay. I'm just looking at the past month just to give a visual here of the US dollar Japanese yen. And of course, you can see the big drop off. You can see when the operations
Mm,
happen. You just see the yen trading around 163, 64, and then dropping off like a cliff. Seems like there was probably a couple of operations here, just the way it was actually done and the way the chart looks. But yeah, the US intervened. I believe from what I read, it was the first time since 1998, if I remember correctly, something like that. So yeah, the US, it's the first time they actually intervened. There was another time in the mid 2010s, but it was actually the other way around. They wanted to weaken the yen. I think it was 2010, 2011, and there were several countries that did that. But essentially, the Ministry of Finance, because they're the ones that will do these operations, obviously being supported by the Bank of Japan, they will sell US dollars and buy Japanese yen. Therefore, you create more demand for the Japanese yen, and then strengthening the Japanese yen. So the estimate that I've seen suggests that Japan spent between 36 and 59 billion. It's hard to know exact figures. And the US treasuries, again, we don't have the exact figures, would be 5 to 10 billion if we go with the note that we saw on Scott Besson's desk. If people are not sure, just Google it. You'll see. I think it was taken at Camp David. Again, whether it was planted there just as a way, it probably was, if we're being truthful. And the yen initially definitely strengthened from 164 to about 155, but now it's around 158. So we're already seeing it weaken again. Again, if it goes up here, it's just a USD to Japanese yen. So you're essentially getting more yen for US dollar. That's typically how people will look at it. So that's the gist of it, of what happened. Why would the US intervene? There's a lot of different aspects to this. First of all, Japan, as I did some reading on this, they will have U.S. reserves in actual U.S. dollars, but for the most part, when they do large interventions like this, they have to sell U.S. treasuries, and then I feel like you know where I'm going with this. If they sell U.S. treasuries, it puts more treasuries on the market and puts upwards pressure on U.S. treasury yields. And that was likely one of the big motivating factor for the U.S. to actually help here the Bank of Japan, although the Ministry of Finance, although most of the work was still done with Japan. And what's really interesting here is they actually did not use US dollars to buy Japanese yen. Did you see that? They actually used a euro. So they used euro reserves
hmm.
to make the transaction. Not that the amount that they did would have moved the needle a whole lot. Maybe it was just Scott Besson trying to living
Have
his
an excuse
previous
to get
life.
have an excuse to
What's
get rid of
that?
some euro. Have an excuse to get rid of some euro.
Yeah, it could be that, or just kind of playing games because he used to be a foreign exchange forex trader. So whether the reason or not, that's it. But I think the biggest story there is probably them trying to avoid Japan selling U.S. Treasuries into weakness, because U.S. Treasury yields, as well as I do, have been rising quite a bit. And if you have one of the biggest holders in the world starting to sell that off to protect their currency, then you can get into some potential issues. So that's essentially generally what happened in terms of the yen carry trade. The yen carry trade, the way it works is pretty simple. You typically just want to borrow in yen and you want the yen to stay stable or weaken, with the goal of investing that money typically in the US, but it could be elsewhere. But typically in the US, you'll collect a higher yield on it because the yield curve is much higher in the US compared to Japan. So you'll make money as long as the yen doesn't straighten. If it starts to straighten, then you can get into trouble. It sounds like they gave market participants a heads up that this would be happening to avoid anything too major. Like we saw, I don't know if it was last summer, 2024, where we saw the yen carry trade kind of have a mini blow up over there.
Yeah, I guess it would be worth kind of moving this over to how does this impact, like when we talk about bond markets and why are we concerned about this in Canada and in the US? I mean, there's a chart from Hedge yesterday. Let me just see if I can share it here. So U.S. mortgage rates hit their highest rate in a year on a 30-year fixed mortgage, and your refi applications index obviously down pretty significantly. So, I mean, the bond market moves into the credit market pretty reliably, and I think it's very worth paying attention to in my industry because, in Canada, we have the Canada 5-year, we have CMB, Canada mortgage bonds, which are sort of like a derivative of Canada 5-year because government's the biggest buyer of CMB. So they almost yield curve control on that. It's like the 5-year plus 50 bips. I don't know if you knew that, by the way, but they buy 50% of
No.
CMB.
No, I didn't.
Yeah.
No, I didn't know that.
They call it a spread capture. So basically they're like, we'll buy 50% of the CMBs and we'll make the 50 bip spread, right? Because they see them, but which is like fine. It's actually been a decent revenue generating exercise, but I would say like that can't be their sole motivation for buying half of the mortgage bonds in a country. But anyway, so like, your bond yields in the US being impacted by a lot of the volatility. Canada, I think we're seeing a little bit as well, but every time I see somebody, I stop at like even watching the stuff about the carry trade on Twitter because I'm always just like, well, every 5 days I feel like some bear is posting it unwinding. Is this a credible risk to what's happening right now, or is it like is this the one that's going to do it, or is this them admitting that it's a risk factor, or is it like a nothing burger like some of the others?
Well, I think this chart here, I don't know if you've ever seen this one. Like, it's actually quite a nice graphic from investing.com. So it looks at the yield curve. So you can actually go from 6 months all the way to 30 years. And they just show it current, 1 month ago, 1 year ago. And you can tell why the U.S. government is probably a bit nervous about this because the 10-year yield, because that's a driver for the mortgages in the U.S. So it's up 10 basis points over a month ago and 40 basis points over a year ago. So that's pretty major. And it's the same thing in Canada, probably not as pronounced here. So so not as pronounced if you look at the 5-year, but it's still, pretty significant difference. So you're looking at a year ago about 30 basis point, roughly less than it is today, and a month ago about 13 basis points. So that's what we've been talking about, but really cool tool because you can really see the interest differential. And then if you start looking at the Japanese one, this one is pretty interesting, especially if you start comparing it, especially a year ago. There's not much difference from a month ago. The Bank of Japan has been very slow at raising rates as well. But if you start thinking, okay, you're looking at 10-year yields around 2.8, and the US is looking at 4.66 right now. So that spread, that interest differential between Japan and the US is another issue as to why the Japanese yen, like in the traditional sense, is weaker, because why would you hold Japanese government bonds when you can go and park your money in the US for 180 basis points more on the same kind of bonds, and you're dealing with the reserve currency of the world? Like, why would you want Japanese yen. So that comes down, I think, to a bit of the root cause. Whether they'll continue to increase, we'll have to see. And a lot of people are asking, like, why aren't they increasing faster? But then you can get into the trouble where the interest on the debt gets pretty high pretty quickly.
Right. And then, so how does this end for Japan? Like, do they just have to inevitably buy? Because, like, why would anybody want to also pile into like their future of their economy when it's a contracting population? They're not growing their economy through immigration, et cetera. And I mean, and I think this is an important question because there are several other places on Earth that are about to repeat the same path. I mean, I think South Korea has the lowest birth rate in the world. They're also a similar thing. I don't know if a lot of these countries even could grow their population through mass immigration, like the Anglosphere. I could be wrong, and I'm not trying to be like, it's not a statement about people's willingness to move to those countries, but it just does seem that, like, when people want to go to immigrate somewhere, they're thinking Canada, US, Australia, etc. How do all of these places actually, like, how does this whole thing end?
I'm
Or do
not
we not
sure.
know? Yeah.
I've never been to Japan.
Weird.
Have you? Like, I've been
No.
to Taiwan, and it's very homogenous.
Yeah. My
I
daughter
always
always said she wants to go to Japan, so.
Yeah, I mean, it's I just remember, like, I was talking to a friend not too long ago, and I just had this anecdote with I was there like for 4 or 5 months in Taipei when I was 21, 22, and I was living in a suburb with this Taiwanese family. Then there was like it was all Asian people.
Mhm.
And I remember seeing a black guy, and we actually like stopped in the middle of the street, introduced each other, because
So
we were
funny.
like, we couldn't believe it. Like, that's how homogenous it is over there. Just to your point, I don't think there's a whole lot of immigration. Of course, if you go in Taipei, more in the financial district, you'll see more diversity, like you'll see more foreigners and stuff like that. But that's just, it was 20 years roughly ago. So that's an anecdote. It might have changed, but that really surprised me, especially living in Canada where you see all different kinds of culture. You're kind of used to it.
Yeah.
I remember that interaction, like, we both stopped, and that's how, like, we just couldn't believe it. Like, that's
Mhm.
how homogenous it was. So that's a good point over there. The other thing with the weakening currencies from the US perspective, um, they say they want a strong US dollar, but a weaker US dollar does help exports, right? And everything going on with the trade war, that it could be an attempt as well from the US to try and making sure that those currency are strengthening so that their export are still a bit more competitive. If the US dollar rises, obviously it's going to make it less competitive for other countries to buy US good. And I don't know if you're old enough to remember that, but Jean Chrétien, when he was in power, people would ask him about the weak Canadian dollar, and he would always say it's good for exports.
Yeah. Yeah, yeah. Yeah, I guess we'll
with
see.
it,
Right now,
with
we
his
don't
charming
really have an
accent.
we don't really have a export-based economy right now, so it might be a little bit more challenging, but,
Mhm.
yeah, I think, the Japan piece, before we move on from that, I find it interesting because, like, you move it over to the real estate side of things. They have
Yeah.
9 million vacant houses in Japan, and you see this phenomenon happening in other places around the world. Italy is
Can we
another.
ship those to Canada or what?
Yeah, I know, it's funny, right? Like, there's literally houses you can get for $0 in, like, Japan, Italy, many of these countries that
Yeah.
are aging at this rate. So I've always thought that was, like, just kinda funny way for, a lot of people just think about housing. It's an easy way to think about, a country's economy, and that's sort of like what's on the other side of this great deflation perhaps that you're seeing. Their stock market also, like, round tripped from, like, what was it, the 90s? Like, it just hit its 90s peak. Was it the 90s? Um,
Yeah, it had been, yeah, it took decades for it to get
yeah.
back to the peak. Yeah.
On that note, because you were talking a little bit about Canada exports, et cetera. Should we jump to GDP, or is there anything
Yeah.
else in Canada that's worth? Yeah.
No,
So
no, I think that's good. I would just, for people interested in learning a bit more on what's going on in the U.S. intervention there, Odd Lots had a really good podcast on it with someone that was formerly at the Fed. So I'd encourage people to listen to that one. There's also, they go into more detail about the FEMA repo facility, which allows countries to actually pledge treasuries and get U.S. Dollars in return without actually selling them. So they talk a bit more about that, and also the sheer volume of assets that Japan owns in US assets, which probably played a big factor into that. So I think that's enough for that, because we are on we have a hard stop in about 30 minutes. So let's move on to GDP. So is Canada in a new recession or what then?
Yeah, so the GDP, I mean, it's only 1 month worth of data, but I think was it May? May
It
GDP
was me.
for
Yeah.
read for like gave us an annualized pace for Q1, or sorry, Q2 of like 3.4% if you annualized it. So, I mean, this would be strong. I don't necessarily think that like I think that it's probably an outlier, and GDP is tough in Canada right now because it's like it's really to go back to the trade side of things, it's really impacted up and down, like very volatile based on imports being pulled forward, inventories being held, and then exports. And so like trade war really does game the GDP curve up and down quite a bit. I thought the other one that was interesting that I'll pull up a report on was that, did you see that StatCan is going to start rolling the population revision through as they with the non-permanent residents like exit counting? So we can talk a little bit about that. But anything stand out to you on GDP? I mean, it was basically like mostly this is really our push into natural resources, oil and gas, the Ring of Fire. Like a lot of it is like mining projects, et cetera, finally paying off. And hopefully
Mhm.
the government, I mean, Carney's been pretty good at getting it like smooth, even like with his base, who obviously wasn't into that stuff, or maybe more the Trudeau base, but like a lot of the people pulled from the NDP, et cetera. I'm not people that you would historically say, um, are going to be voting for oil and gas and mining and all of these things. But I mean, you give them real economic crisis in their life, they might just take whatever they can get if it's going to produce results, and it seems to be doing it. So
Yeah, yeah. I mean, so far, like it's hard to disagree with it. I think, I think a lot of the decisions that he's taking and the government is doing, the actions they're taking, they're kind of aligning with what they said and also what the conservatives were saying. So, you know, whether people like it or not, depending on what brand it is, I guess that's their prerogative. But so far, I think it'll be just interesting in terms of what the quarter will look like as a whole, because we'll need June, which will probably come out in like 3 weeks or a month. This one was just July 31st, but isn't like, correct me if I'm wrong, hasn't it been like a whipsaw a little bit on the GDP front so
yeah,
far this year? It's kind of hard to
that's what I'm
just take
saying.
1 month, yeah,
Yeah.
exactly, as and just try to figure out if it's going in a positive trend or not.
Yeah. Well, even on a quarterly basis, like last year
Mhm.
you had up, down, up, and then down, or down, down, right? So the last, because we were technical recession. And a lot of like, again, if you have tariffs on, tariffs off, oil prices up, oil prices down, like there's so many factors that are going to weigh on these numbers and just make them super volatile. I think my greater concern is like if we end up with, not enough of an economic emergency that the central banks are incentivized to do something about it on the interest rate side, and you end up with like this long drawn out like sideways grind like the 1990s, whereas like a shallow recession but like a really long one. My concern, like I don't really care personally, and I'm not trying to say that that's my bear case, or like to try and be too much of a doomer about it. But I think that Canadians can't weather a long-term storm that well. Like we're levered up. We have 180% debt to household income. We all resetting our mortgages at higher interest rates. If unemployment kind of like, if we don't get to a recovery, like the faster, I think in an economy that is this indebted, a deep, fast recession is probably the preference for most people. Just rip the Band-Aid off. I think. I don't know what your thoughts are
You
there.
think they'll allow that? I think
No, like, yeah.
they'll just start fiscal spending like crazy.
Well, you're already seeing fiscal dominance in
Yeah,
both
but
Canada and the
though
US.
it's
Like,
going to just ramp up, right? They're
yeah.
technically spending like drunken sailors, and the economy is like not bad in the
Yeah.
aggregate. It's not probably not great either. It's just I would say just going on neutral for the time being.
Mhm.
What if like it really starts declining? Like, do we really think governments will stay idle? They'll
No.
just start fiscal spending, and then the central banks will have to monetize it, and we'll
Yeah.
get into more fiscal dominance. I think,
Yeah, I agree. I
to
think
me,
you're already
that's
seeing it.
yeah,
Like,
yeah,
yeah,
exactly.
I think we're already in a fiscally dominant position
Mhm.
where central banks really can't do that much. Like, look at what the bond market is behaving in part the way that it is because governments like are it's clear that they're going to spend an insane amount of money over the next little bit. And so if I'm a bond investor, I'm like, well, there's lots of bonds coming. Why would I pay more and accept a
Mhm.
lower yield when I know that they're going to need more money to fund a war in the US or fund the AI capex or in Canada fund all of these nation building projects. I mean, I would say that both Canada and the US are very much behaving like, your recession era make work like spending that you would see and maybe they can scrape by outspending a recession. It just comes with probably with long-term consequences on what we're seeing on the yield curve and then on their long-term debt obligations, which are, I mean, I think like the recent figures came out, like Trump has spent 20 26 or like almost 30% of all money that's ever been spent by presidents in the US. So, I mean, like this is very
Yeah.
uncharted territories, right? Like the
Mhm.
amount of money supply. And if you take the MMT like look at it, it's like this
But
all
to
this
be fair, the next president will surpass Trump. Like,
because of
that's like,
inflation.
yeah,
Maybe, yeah,
yeah,
maybe, but like very much because of inflation. But I think, well, Trump obviously also had the first bout of the pandemic, right? Like
yeah.
2020, that was a tough, like, that's not easy to, like, I don't know what my response would have been,
No,
like, I don't know if it would have been let it burn. And in most cases, I'm a let it burn kind of guy, but I think like
yeah.
that economic event was a little bit different.
I think
Uh,
most economists are critical not about the spending that happened and the stimulus that happened like at the onset. I think most will say, okay, in the moment, I guess, sure. But it's really when the economy started picking back up that spending just continued. They
mhm,
didn't really rein it back. And I think that's where governments really plays themselves in a corner
for sure.
is it's one thing to spend it, but they also didn't rein it in when the economy was doing well. And then at some point you're going to get a downturn. So if you're not going to rein it in when it does well, what are you going to do when there's a downturn? You put it on overdrive.
Yeah. Yeah. Yeah, and I think like Carney obviously has the confidence of being a former central banker. Like I think he is comfortable trying to play a little bit of central banker role here on the fiscal
Yeah.
dominance side, and feeling like he can maybe land the plane safely and take because Macklem's kind of trapped in what he can do anyways. I think like if they mentioned it in the monetary policy report, if we cut too much, we're at risk of imported inflation, and the Canadian dollar's already devalued pretty significantly, not just against US but also against other currencies around the world. Um, and we don't have a big enough export base to really benefit from a much weaker Canadian dollar. But then if we leave rates where they are, or if we hike, which it sounds like that's pretty much off the table here, and Canadian USD or like dollar CAD exchange would indicate that the market believes that Canada can't follow the US into hiking. um, we're going to blow out your consumer who is levered to the gills here. Like, and Ben Tal mentions this a couple of times, how he felt that in some of the discussions he'd had with central bankers that like, uh, for every rate hike, it constricts credit twice as much in Canada, or sorry, it constricts the economy twice as much, or Canadians feel it twice as hard as Americans because we have almost twice as much debt, right? Like well, not well, yeah, I guess it wouldn't be that far off. I think US is like at almost it's like 100% debt to household income, and,
Mhm.
and
We probably have
we're
more
at
variable
180.
debt too, right? So that's
Well,
the biggest thing
even our fixed debt is
is
variable because
variable. It's
it
5-year
resets
variable
in 5
or
years.
3 or whatever. Yeah.
Yeah, what a mess. Yeah, so I think that they're limited in what they can do, and I think the fiscal side is just gonna keep spending to try and stimulate the economy, and hopefully it results in something positive. I like, you know, I much prefer seeing billions of dollars go to pipelines rather than like whatever, you see the stuff like, gender neutral rice in Malaysia or whatever. Like, I think spending
Mhm.
money in good stuff at home is probably not a bad idea.
Yeah. Yeah. I mean, I think, especially what we've seen, I think in the Middle East, if there's any positive thing from that, and obviously I don't want to make light of what's going on there, because you don't want to see war going on and people getting killed. But if there's a positive aspect for it domestically, is I think it's waking up a whole lot of decision makers that we need some more infrastructure for our energy, and we need to be more strategic, not just energy wise. I think, we've seen it with the Canada Strong Front, and I think the critical mineral, I think, I can't remember, but there's different programs they have in place. I think it's really the last, since the war started, but even before that, I think it's highlighted ever since Trump came back into power, that we need to be more independent in terms of certain resources, and just exporting market as well, more independent and less dependent on the US. I don't think the dependence will go away anytime soon, but at least building that infrastructure, I think it's a path in the right direction, to say the least. So, anything you wanted to add? Did you want to talk about gold though?
If you want to jump over to gold, but the one thing I'll mention while we're still on kind of like you mentioned the war in the Middle East and stuff is, oil prices dropped like pretty significantly between
Yeah,
our
they
last
did.
call
Yeah.
and this one, but then I think they've jumped back up a little bit, like to 78. I mean, but like to see them at 75 with like a active war with no end in sight in the Middle East. I mean, we know the U.S. is spending or flooding the market with the strategic petroleum reserves, but they have to buy to fill that back up soon. China has the same thing coming, and then Trump, I think, was quoted saying we may have to send oil prices higher in the last couple of days. I think that tweet's from yesterday. And then the other one that I found that was
Is
interesting
it a
because
tweet or the truth?
it was no, it was like it was. I think it was from an interview, but that's
Okay,
like
okay,
the language
okay.
that he used.
A tweet. Okay.
Yeah, but where am I? This is an interesting chart that came out from the Kobesi letter on X, which is that because you hear oil prices are coming down, but gas prices aren't, right? Like we're not when we're paying.
Yeah.
I mean, fuel inflation was one of the biggest parts. So the oil the actual big oil industry is just basically saying, well, there's a war on, so nobody's really gonna blink if we just crank the price up for fuel, and if we're paying lower for it on the input side with the strategic petroleum reserve pricing basically flooding the market, they're on track to hit what the third highest on record for profits
Mhm.
in the second quarter this year. So I thought that was just kind of funny because again, you hear about all of these things and it's like, well, if oil prices are low, why am I paying like record highs at the pump right now?
Yeah, I know. Well, it's also, there's like the spreads that you'll see between oil prices, refining. Like there's more than just,
For sure. Yeah, it's a pretty
yeah.
complex supply chain.
Yeah, it's exactly, like we're not experts in that, but I wanted to bring even Suncor came out. I'm just having trouble pulling the data here, and they had, like, I looked at Imperial Oil. So if you listen to the podcast today with Dan Kant and we talked about Imperial Oil just because we are curious to see how they're doing. And Suncor, I haven't looked at the quarter here. I'll just show what their profits, but also free cash flow looks like. This is quarterly. So you can see the free cash flow in green, profits in blue. It's essentially the best quarter since 2022.
Crazy.
Yeah. So these are the two. And it's really important. Like it's worth noticing because this is the first quarter since the war has been like on for the full quarter, because we had Q1, which was just a month's worth. And obviously, I think the market was still getting too used to everything that's going on. But yeah, Suncor, I haven't looked at Canadian Natural Resources. They reported, I think, earlier today. I assume they just crushed it on an earnings basis. But yeah, I own some of these names. I think I own Suncor, Cenovus, and Canadian Natural Resources. But yeah, they will be just printing money, even at 75, 80 plus. And with the Western Canadian Select being a discount to WTI, they're still printing a whole lot of money. So it just goes to show that, there are definitely some windfalls for Canadian companies from this conflict.
Yeah. I think that it's plausible if they play their cards right to assume that Canada could avoid I mean, like, again, I guess we saw the technical recession, but if we're allocating money to the right places in Canada's economy, especially in this sector, like the war is not going to end anytime soon, I don't
No,
think, right? Like
it
this feels like this is gonna be
baffles
like
me.
a decade at this point.
Yeah, how the markets like are still seeing these massive swings on news. Like you're seeing stocks go up because for the most part they're just up because oil prices are down. You get news that a deal might be in, and then you start reading on the actual deal. I mean, U.S. and Israel, I think on the 31st, were looking to like launch strikes, and then Trump decided to cancel it, but he said he wanted a quick deal on Hormuz. Now, apparently, Iran and Oman, that's on the other side of the strait, they're working out on a deal that would impose like 5 to 7% fees on cargo value. And I guess Oman is pushing for slightly lower. But the issue with that is it would not allow ships to go through because the U.S. sanctioned the authority of Iran, the Strait Authority. So ships are not allowed to go through and pay those fees. So if they decided to go through, they would actually void their insurance. So you have all this stuff coming out, and basically we're still in the spot where it's not looking good. They're trying to work out a deal, but now I saw earlier today, so Iran is warning the US that if they attack them again, they'll start targeting again Gulf nations.
Right.
And this is earlier today. So that's from Reuters. So it came out earlier today. And it just, I don't know. I don't understand why markets are moving still after what, like the 17th time at this point.
Well, I
That
feel like it's just a liquidity thing.
Yeah.
Like liquidity drives the markets. Like there's nothing
It is,
other than
yeah.
that. I think it's
Or
just
algorithms that go based on headlines. But at the same time, you do wonder at some point that like, will investors and traders just learn their lesson? Like,
well, there will be a catalyst at some point that I think, I mean, like none of the things that we're talking about are properly priced in, right? Like oil going to where it should be for an active war in one of the largest oil producing countries on earth, and the, and active destabilization in the Middle East of all of the other places that would also contribute to that. I mean, this doesn't end with oil prices staying at $75 a barrel. I don't think. I could be wrong, but I don't think there's a precedent for.
The counter argument is demand destruction, right? So there's going to be enough demand destruction. And I guess the other one that we've talked about is China being a force kind of reining in its imports for the time being of oil, allowing neighboring nations to import a bit more as there's less supply in the market. But how long can that last? Will the demand destruction be strong enough to make up for that supply disruption? There's a whole lot of things. That's the other side of the argument, that you might have kind of counterbalancing forces that will push the price of oil.
But so when we talk about demand destruction, like I think about it as just the consumer. So like what would be necessary to make consumers stop buying? But I guess it doesn't really matter if like the biggest
you can have governments,
oil,
right?
Biggest buyers
like we
of oil
saw
are China and the US.
Yeah, didn't we see India at some point in the last couple of months impose, some restrictions on people traveling to work? Yeah, exactly. You could have you could have governments doing things as simple as like your license plate ends with like an odd number. You're not allowed to drive on this day. Even number you are, and vice versa for the next day. Like there's ways for governments to start imposing that. So that would be a forced kind of demand destruction.
Crazy. Yeah. And then I guess the other thing, like it was actually fertilizer. It wasn't fuel, but in India, I think they were rationing, or like saying that
I think it was maybe in the Philippines or something. There was an Asian country for sure that did that. Yeah.
Yeah, frick, that's crazy stuff, man. Crazy stuff going on. Makes you like, honestly, like pretty grateful to just be in a country like Canada when you hear about stuff like that.
Yeah, we're lucky to be, I wouldn't say, I think, we're a net exporter, but at the same time, we need some infrastructure to get oil from west to east, because a lot of the east actually gets its oil from the US. A lot of people don't realize that, but it's actually, that's where we stand on that.
What do you want to move on to here? Do you want to move on to population, or you mentioned gold?
Yeah, I can touch quickly on gold just because it kind of segues nicely with oil. So it was up 4% yesterday. So was silver. The price is probably up on a combination of things. First of all, gold has been hit pretty hard since the start of the war in Iran. A lot of people are just mentioning that it's because you had countries that essentially had to sell their gold to get US dollars to secure some oil. So it puts some downward pressure on the price of gold. Obviously, when you have something that ran up as much as gold did towards the end of last year and early this year, I think that's going to play a big part of it too. That there's just means regression a little bit. You also have the fact that there's lower probabilities now that the Fed will hike rates. So that would be definitely a bit on the bullish side, especially if you start factoring in that inflation expectation seems to be rising overall, especially in the U.S. So you have that combination. It's usually not a bad combination for gold because gold is seen quite a bit as an alternative to U.S. Treasuries. So if rates stay a bit lower, at least on the short end, so if the Fed doesn't hike rate, so if you're someone that wants that's debating between gold and US Treasuries or US Treasury bills, more specifically, if the US is not hiking rates, then gold may seem a bit more attractive. Obviously, I'm aware that the long hand has been increasing, but that could be another tailwind for gold there. And obviously, the US dollar has been weaker. So the fact that it's weaker, gold is denominated in US dollars. So that's a bit of a tailwind for the price of gold, too.
Yeah. It is funny when you mention like countries maybe having to sell some of their oil to fund the oil, or sorry, gold to
Gold,
fund
yeah.
oil. It's like this, like all of these things, like, I don't know, none of this stuff sounds like it gives me the warm and fuzzies for the global. Like maybe you don't end up with a made in America recession, but the global economy just gets blown out by this oil trade. And then you have that eventually trickles in. I mean, this is a long-term thing, but I feel like eventually something has to give with what's happening, right?
Yeah. Yeah. And the last factor here that's pretty important to you is you're starting to see inflows again from ETFs. So last quarter was pretty big outflows, and then you're starting to see inflows altogether. So, but yeah, I mean, countries, the world trades in US dollar, right? I think that's
Mhm.
Brent Johnson's dollar milkshake theory, where he thinks the US dollar will remain strong against other currency for a long period of time. I think he gets misquoted all the time because people say, like, oh, they assume the US dollar will stay strong against other assets like gold. That's not what he's saying. What he's saying is it'll stay strong against other currencies because, if Dan is in South Africa and I'm in Canada, we're probably not trading our respective currencies. We're going to be trading in US dollars and then converting those to our respective currency, or keeping in US dollars and buying US assets with it.
Right.
So that creates some structural demand for the US dollars. So coming back to the goal aspect is if you have countries that just have, they'll have you either US treasuries as reserves typically or gold. Well, they're going to sell whichever one they can get US dollars for. If they have more gold than US treasuries, then they'll sell their gold if they need US dollars to buy that oil.
Right. Yeah. Yeah. I guess then for Canada, like would a weak currency for our oil end up being beneficial? I guess we're not exporting enough to really make it a massive, like it's not a,
Yeah, I think we're mostly exporting to the US, right? So
yeah, fair enough. Okay. Should I jump into this population thing? I thought it was kind of funny. And I think it's an interesting,
yeah,
like,
go
'cause this
for it.
could, this
Yeah.
could completely change a lot of key metrics. I mean, it would explain why GDP has been so strong. There are like I mean, we've seen immigration numbers, right? Like, Canadians are leaving at, I think, the highest level that we've ever seen. Non-permanent residents are leaving, the ones who are actually showing up as data points, like leaving and choosing to do so on paper, like, so StatCan actually has the right data point to measure that, are leaving at high numbers as well. But there's this X factor, which is that we haven't been properly tracking exits of temporary or expired visas since like the new non-permanent residence system existed. And the immigration minister, I think this was like a couple years ago. Actually, this was January when they mentioned kind of the newest like attempt to do this. So this headline here says immigration minister wants department to track exits of temporary residents. And so they've finally gotten around to actually doing this, which, you would think, like, I mean, in a first world economy with, all of our institutions, we would have had this one figured out a long time ago. But um, Ben Towell's been talking about this, like this phenomena of overstayers. I'm not sure if you're familiar with it, but like,
Yeah.
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 So I'll see if I can find the original report. But since, like, I think it was 2013 when he put his um, first report out, and it actually resulted in Statistics Canada saying in this is 2023, that they were going to change the way that they estimated the number of non-permanent residents. And the report link
You
doesn't
got
work here,
blocked.
but yeah. But basically CIBC had a report out before that where he mentioned that I think he had estimated like several hundred thousand, or no, he had mentioned 1.5 million, that we were not counting the population properly then. And then they added this, I'll pull it up on CIBC Economics, but basically that he had added this updated analysis of, and I'll StatCan did a release on their page mentioning how this, like, they were going to start doing this. Um, and they expect that this will bias, obviously, your unemployment numbers the most by adding to the denominator. He has 160,000 in 2025,
Mhm.
100 or 210,000 in 26, 27, and 110,000 in 2028. So your unemployment, I mean, I think Better Dwelling calculated this as unemployment should actually be closer to 7.5 rather than whatever it is right now, 6.4, 6.5.
Yeah. Mhm.
So your unemployment rate goes up significantly, and it's like whatever if it's just numbers, but it's not really, because when LFS gets released, even though it's reasonably frequently revised and
Labor
whatever,
force survey for those not sure. Yeah.
the labor force, like your unemployment data gets
Yeah.
released, your bond market reacts pretty, like it does, right? I think it prices
Mhm.
in like what the Bank of Canada is going to do.
Yeah.
Same thing with inflation, same thing with GDP drops. So the integrity
I
of the
mean, they
data
react to
matters.
crappy data, so,
Yeah, which
and
is
then
funny, right?
it gets revised 6 months later, and they don't
Yeah.
really react on the massive revision,
Yeah,
so,
I know, it is
yeah.
crazy, but StatCan has a thing about this. I gotta find the labor force or the population revision. Um, is this it here for 20? That's not it, but they mention how, oh yeah, it is right here. So they mention basically like how there's differences, and then they're going to be adding the numbers back, but they use a 12-month rolling average. So we won't actually have real numbers on any of these metrics. So GDP per capita, as an example, could get skewed down if we actually have more people in Canada than we thought. Your GDP growth could make a little bit more sense if we had, 150 or
Yeah.
250,000 more Canadians in the country than we thought.
So I
Um,
guess using the rolling average is the reasoning that there's still a big portion of these people that will be leaving, so,
well,
whether we're
I think
counting
they've
it
just
or not, or
always done it because
okay.
probably there's significant enough volatility in like certain months,
Yeah.
like I don't know, like when international students were like in the hundreds of thousands. I think there was like at one point like 800,000 international students. If they all just come in September and then leave or whatever, just
Yeah.
hypothetically, like, it's gonna,
Smoothing out, yeah.
yeah,
Mm,
that might be the rationale. I don't know, but I
yeah.
mean, it could just be because it's politically convenient for the data to be spread out over a 1 year period, because we aren't going to see the actual results of this data and how bad it could be. I mean, it might not even be bad. Like, you go back to the 1990s, and I'll pull up a population growth curve in a sec while you're chatting, but go back to the 1990s. Like, I think Tal's numbers might be correct, but I think a lot more people just left willingly than people might imagine, because
Yeah.
if you're okay, like take your prototypical non-permanent resident, right? I'm from India, which was the biggest feeder country during that period of time. Most non-permanent residents are from that area. They maybe are not, they're working in the gig economy, or they were an international student on some crap degree that they got sold by a college recruiter that told them they were going to get a job in permanent residence, and they didn't. I mean, why would you stay? Like, if the economic
Yeah.
prospects aren't really that good, if you're like,
Mhm.
if you're gonna have you came here for better quality of life. If you're not achieving it, you might want to go back and be closer to your family, maybe have some better weather,
Yeah, of
you
course.
know,
Yeah.
sense of community. So
Yeah.
it wouldn't surprise me if there were just organic people leaving. It also wouldn't surprise me if a lot of people just stayed and have overstayed their visas, and the, the exit data confirms that. So I'm very interested to see when the numbers come out, what it actually ends up looking like.
Yeah, no, it'll be interesting to follow. I think we'll have to wrap it up here. I have to head out for a doctor's appointment, and I'm sure I'll be waiting 15 minutes in the waiting room, but just in case.
Got to do it. Yeah. Okay.
Yeah.
Sounds good, man. Well,
Okay.
pleasure as always. And yeah, we'll see you all again. Thanks for everybody who tuned in, and we'll see you all again next. I think, were we going to keep doing Thursdays?
I think we'll keep
Thursdays
doing
good.
Thursdays.
Yeah.
There
Fridays,
seems to
summer.
be more people that like that time, and especially with the summer, maybe we'll revisit in September. Yeah.
Yeah. Sounds good. Okay.
Okay.
Well,
Take
have a good
care.
one, man.